When someone is in their 70s, 80s, or 90s, capital gains tax stops being a technical tax issue and becomes a life impact issue. It affects retirement security, healthcare planning, legacy goals, and even emotional peace of mind. Here's why it becomes such a big deal for this age group. 1. They've owned assets for decades. Long-term ownership means massive appreciation, very low cost basis, and very high taxable gain. A property bought for $200,000 in the 1980s might now be worth $2 million. That's a $1.8 million gain, and depending on the state, taxes can easily take 25 to 37% of that. At that age, losing an estimated $450,000 to $650,000 to capital gains taxes is devastating. Secondly, they need the money for retirement, not the IRS. People in their later years often sell because they need cash flow simplification, healthcare funding, or they want to stop managing tenants or a business. But the tax bill can be so large that it prevents them from selling. This traps them in assets they no longer want. 3. They don't want to start over. 1031 exchanges will force them to reinvest in another property, or take on new debt, manage new property, or stay active in real estate. Most seniors don't want that. They want simplicity, not another 10-year cycle. 4th, they want to leave a legacy. At this stage, the focus shifts to protecting wealth, passing assets to children, avoiding unnecessary taxes. The capital gains tax directly reduces what their family receives. 5th, they're afraid of making a mistake. The fear is real. What if I sell and regret it? What if I run out of money? What if taxes wipe out my retirement cushion? This emotional burden is huge and often ignored by advisors. 6. They often don't know that there are IRS-approved alternatives. Most seniors think their only options are pay the tax, do a 1031 exchange, or never sell. They're rarely told about installment sale trusts, structured tax deferral strategies, and legacy-focused planning tools. These alternative strategies can give them tax deferral, passive income, diversification, and more importantly, peace of mind. So if you're trapped in a capital gains tax hole, a 15-minute chat together with free materials we give out will show you strategies to exit your assets tax deferred according to your terms. Just reach out and let us know. Thank you.